As the other one, it's under massive pressure after the company reported a weak set of third quarter numbers. Ekta, tell us what went wrong this time.
Absolutely. It is a disappointing set of numbers, and management had indicated that generally second half is when they would probably see better numbers, better recovery. That hasn't come through. The piece of news additionally, besides the numbers, is that they've approved a rights issue of around 1,050 odd crores. Now, coming to the numbers, revenue is up 11.5%. The key disappointment unequivocally is definitely the margins this time. They've come in at 5.1% versus 14.7%. The loss has widened to 90 crores versus around 37 crores on a Q-on-Q basis, but versus a profit of over 160 odd crores same time last year. Q-on-Q as well, margins at 5.1% versus 10%. Now, 9 months as well, as a whole, the margins have come in at 6% versus 12%, and the loss is at over 230 odd crores. Now, in terms of the revenue, it's really not a revenue problem. The street would have forgiven the company if it was a revenue issue. CDMO Q3 revenue is up around 14% year-on-year. Complex hospital generics, which is basically anesthesia, drugs, etc., is up 6% year-on-year. India consumer health, which is basically a whole host of brands which they sell, many of them over the counter, is up around 37% year-on-year, so that's done very well. They also have a strong track record when it comes to the US FDA, 12 years, no OAIs or official action indicated status, but the street doesn't really want to look at that at this point in time. Stock is down over 50% from the listing price of around 201 rupees. And remember, until now, post the listing, there have been a couple of brokerages which have been quite positive on it. For example, Axis Cap initiated a coverage with a buy at a target price of 160, and Jefferies initiated with a buy and a target price of 150. Stock is way below those target prices. Call at 5 p.m. today. So the street will watch out for what the management has to say.
Okay, Ekta, thank you very much for that. By the way, the string of negative earnings from pharma continues, right? Particularly on the margin miss. So Piramal Pharma she spoke about, but you remember Divi's Laboratory, 40% plus margins. They came down to 23-24%. Even Laurus Labs margins were at the lowest level that we've seen in the last 4 quarters. So this pricing pressure is hitting many of the pharmaceutical companies this quarter, and margins particularly have been weak for Laurus Labs, Divi's Laboratory, and now even Piramal Pharma. So that's a bit of a worry, right?
And it is showing up in the stock prices as well, right? But on the flip side, Cummins, there's a lot of opportunity in the railway sector. As we know, the government is also going in, all guns blazing in the sector. So Cummins is one of the beneficiaries of it, perhaps. It delivered a strong performance in this quarter, and there was a conference call as well. Vahishta is here to give us the latest over there. Vahishta, over to you.
Hi, Sonia. Thanks for that. Well, Cummins, as you said, has delivered excellent set of numbers in Q3 of FY23. In fact, the company reported a record quarterly performance which was driven by a strong domestic as well as the export revenues. The revenues came in at 2,100 crores, which is 12% above the estimates and 330 basis points above the estimates as well. The export revenues have jumped 23%, while the domestic sales were higher by 27% on a year-on-year basis. Like you mentioned, the con call was just a few minutes back, wherein the company has said that they are optimistic to meet the revenue growth guidance, which is 2 times the GDP growth of FY23. However, the company is cautiously optimistic and is watchful for the softening of the capex cycle. The company has said that the margins in Q3 were better off due to better execution and supply chain challenges, which have eased off in this quarter. But the rise of copper, aluminium and steel prices is some kind of worrying situation for the sustainability of the margins going forward. Also, as India moves towards 5G and consumes more data, the need for data centers is expected to be robust in the next 4 to 5 years, and Cummins is one of the leaders in the data center space. Also, the company has said they are witnessing growth across the board due to a strong demand. The growth in high horsepower has come in due to a high demand from infra, from realty, from data centers, while the power generation segment growth was led by infra, hospitality and the manufacturing space. Alongside, there were commentaries on the tighter emission norms in the ongoing decade with CPCB4 implementation, wherein the cost increase could be as much as 50%, while the company expects to take price hikes in the range of 30 to 50%. Also, export potential for the industrial segment is strong, especially in the marine and the construction segments. The North American and the European markets are also continuing to doing very well. So the exports are also strong. Company has not witnessed any market share gains though recently, and this is due to the insufficient capacity to meet its existing high demand. And with ongoing supply chain challenges that they are facing, the company has said they are still cautiously optimistic on the short to medium-term demand. So of course the stock is flying up in trade. Let's see how it pans out in the latter part of the day. Back to you.
You remember historically Cummins used to give us a guidance, but for the last couple of quarters they've stopped giving a guidance, citing uncertainty, and this time as well cautiously optimistic, but they are confident that they will grow faster than India's GDP, 2x of India's GDP growth. Get into